Good morning, traders. It is the 1st of December, 2022. It's 8:01 a.m. Chicago time, coming at you here from Chicago's River North region of the downtown of Chicago. It is, again, 8:01 a.m. Chicago time, episode number 2368. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, what do we have today? Let's get this out of the way early and get you guys to go vote. Please go vote for the Polling for Charity program. If you recall, I showed you the results of the Tuesday positions. We risked about 40 some odd dollars. We made $100 or $80, something like that. And so we want to continue to do that. Remember, this is happening every Tuesday and Thursday until the end of the month. And then we take the entire balance of the charity prop account, which is a live account under EdgeClear, and we will donate that money to St. Jude's Children's Research Hospital. So please take a moment to vote. The link is in your live chat, or you can reach it at eclear.me/event-voting, and I'll put the positions on live as soon as we finish here. Let's take a look at our convergent trading pre-market summary sheet this morning. We have a market that is, compared to yesterday's settlement, is in a mixed posture, except for Europe. Europe riding on the coattails of the big push from yesterday's rally, and so you can see the DAX and the Euro stocks are relatively strong this morning. The S&P is slightly above yesterday's high. We pushed into the 4104, the 4100. We'll see if we can maintain a bid above 4,100 this morning. As far as key earnings, we have Kroger. That's the only major. TD Bank, Bank of Montreal, and Canadian Imperial announced this morning, but they're not majors for the stocks that we trade. Aftermarket, nothing serious there. PCE came out in the U.S. A bunch of stuff came out this morning, actually. The unemployment rate out of Europe came in pretty strong, 6.5% versus 6.9 forecast, 6.6 expected. Personal spending came in at 0.8 in line, and personal income came in at 0.7, higher than the 0.4 expected, 0.4 prior. PCE price index came in at 0.3%, in line with last month. And the PCE price index year on year, which caused a spike this morning, it came in at 6% versus 6.3% prior. So a little softening on the price front. The jobless claims came in better, 225,000 versus 235,000 expected. And that's where we are currently. So we're riding on the coattails of Fed's Chair Powell's comments that they are going to be very sensitive to signals of a slowdown. They don't want to push higher interest rates through to the detriment of the economy. The market took that and ran with it. I think the SOC for this is like 39.56 or something like that. It's way down there. So we essentially moved about 140 points to the high yesterday in the S&P. This morning, China signaled that it's entering a new phase in terms of its COVID policy. If you recall, there have been protests and clampdowns on protests as a result of the zero tolerance policy. Also, China had the Caixin manufacturing PMI for November came in at 49.4, stronger than the 48.9 expected and stronger than the prior of 49.2. So that's positive news there. What we have left today is a bunch of Fed speakers, and then the ISM manufacturing PMI, which is a mover, comes out at 10 this morning, okay, 10 Eastern. So just be careful. How many of you attended the Futures Radio show yesterday with Brian Shannon and Tom Canfield and Credelli and I, where we talked about the news versus price, which one is more important? We had a long discussion about this, and yesterday was a perfect day to have that discussion, actually. And the news, whether you like it or not, whether you listen to it or not, the news really does move price. It accelerates the movement of price, and since we're day traders, we're sensitive to news. Be sure to catch it. It's on my Twitter feed. It's on EdgeClear's Twitter feed. It's on Credelli's Twitter feed. Be sure to catch it. It's like a 45-minute broadcast, and we discussed a lot of points. Tom and Brian made a lot of great points. So check that out. As far as the S&P, we are balanced this morning with a weakish low. Pretty heavy volume, 336,000. And why isn't it blue? Why isn't it blue? It should be blue. No, it shouldn't be. It's less than 350. 336,000. So we're pushing the high side of normal. We're pushing the high side of the first standard deviation of volume over 252 days in the overnight session. That limits 350. 350. The inventory this morning is 43% more long than short above yesterday's close. The inventory is 43% long, so 43 times 337,000 gives you the amount of contracts that are above the close. The range is 32.75, which again is not as high as we've seen recently, but in line with what we've seen over the last 2 weeks or so. The point of control shifted dramatically higher to 40.89. We really pushed up yesterday and held on. Here's what yesterday looked like. Holy cow, this is some real movement here. We were primarily sideways through most of the session. We ended up poking the IB low yesterday, and it looked like things were kind of chugging along under scenario one. Was still looking for a retest of 39.37. We got to 42.75. The prior's 41 and a quarter. So we put in a higher low here yesterday, and then Powell came in right here. That's when Powell spoke. The news came out at 39.56, and it splashed down immediately, and then it spiked up, and it never looked back. I added this line here, which may be confusing because it looks a whole lot like the other lines. Let me just change its color real quick. Let's make it this awesome hot pink color here. So I added this line. This is an anchored VWAP, courtesy of Brian Shannon, who's known as Alpha Trend on Twitter. This is a VWAP that is anchored to that 39.56, and I'm going to watch this into the future. I'm going to keep watching this to see how the market responds to it. You could see that the market pulled back to it and held, pulled back to it and held, which is a setup that Brian Shannon talks about a lot. Not trying to plug his work, but he has done a lot of work on this. Just an extremely knowledgeable guy. So I'm going to track that. So when you see where you see this pink line here going forward, that's an anchored VWAP to the Fed chair announcement. You can see we raced right past all of our levels. The key one being 40.50. Saw two really excellent setups yesterday, and was able to capture one, and into the target for that was 40.50, which took a little bit, but we ended up getting it right here. Everything above here was gravy and left me in the dust. So we finished pretty strong. If you look at the delta, so let's look at the relative delta to see how healthy this move was. The delta moved with price, and I talked about this last week. I talked about this last week, and you could see that, as we sat sideways from the cash open, that the delta was moving with price, but then as price moved higher at 12:30 my time, 1:30 Eastern, the delta was lifting. There was a ton of lifting. We saw icebergs at basically 95, 4,000. We saw icebergs at 40.25, 40.50, and all of those got lifted. And you can see delta spiking into the close here. So we have price and aggression going in the right, going in the same direction. And so far today, compared to yesterday, I'd have to zoom yesterday out of here to get today. Yesterday just skews the scale dramatically. Let's get that out of here. You can see that today we've pretty much been balanced. No participation by the very large lots. Why do you guys think it's 1:30? I'm in Chicago. That's 12:30. I'm anchoring it to the right place. I'm anchoring it to 56. We were not at 56 at 1:30 Central. Just remember, I'm in Chicago. I'm not on Eastern time. So I'm anchoring that to the right place. If you still disagree, let me know. Maybe I'm wrong. I'm known to be wrong often, but I try to be wrong very cheaply. So anyway, so here's we don't see a lot of large lot distribution or participation. But the cumulative delta in the overnight session did not follow the small lots or the large lots. It kind of had took its own path. So we're likely there's a big fight going on between the large and the small lots in the overnight session. I think that's going to spill over into today's session. So yesterday was an impulse higher. So look at that. So we've been moving down. Remember, I talked about how we have to hold yesterday's high to sustain the one-time framing down. That high was 81.75 or 81 and a quarter. I don't remember, right here. And we were really looking good in terms of continuing this move down and getting to that 39.16. If you recall, that was my target below, target above, 40.50. I highlighted those in yesterday's Trader Bite. My brain is slow this morning. And then what we have here is just an amazingly beautiful base from which to launch. We have good kurtosis here on the profile. In other words, we have a big fat section. We have a point of control there, and we launched from there, and we have basically left behind a lot of single prints. So there's a huge imbalance yesterday in the profile. These shaded areas are all single prints, and single prints signify that the market rejected these prices and pushed through very swiftly. So we're likely to see the market come back and clean this up at some point in the future. Who knows when? Now, the market's anticipating lower interest rates or a slowdown in the increase of interest rates. However, on an price to earnings ratio basis for the S&P 500, above 4,100 currently is quite rich. It's quite rich. So this is kind of a fundamental view, which can be wrong, is often wrong, and often wrong by a lot. But before this, the 3,900 was that level. As we were pushing the 3,900, the price to earnings ratio on the S&P 500 individual equities combined was rich, and it would be hard for the market to hold 3,900. The market now repriced, as the talk of easing came along, that number moved from 3,900 to 4,000 to 40.50. The number now is 4,100. So it'll be very important for the OTF, for the higher time frame, swing traders, investment banks, you know, long-term investors. It'll be very important for them to see whether or not we hold above this 4,100. This becomes a key benchmark, because above 4,100, the S&P's price to earnings, or the value in the S&P, kind of tilts to the rich side. Again, this is a fundamental view. It doesn't color how I trade day to day, but just interesting to know for educational purposes, but also for considering that we have come a long way here and are kind of starting to get ahead of ourselves. So as we look at the intraday, this is the intraday, we see that the price structure coming up in this auction is extremely weak, right? We didn't create a form, balance, break, test balance, move up, test balance, move up. We just broke, flag high, break, flag high, break, flag high. And that's very weak structure. So it won't be long, in my opinion, before the market's back at 40.50 and that 40.47 area. So that would be my target to the downside. I'm not advocating for a short. We had an impulse day up. The expectation on an impulse day up with a close at the high with the point of control, look at that point of control at the high, is that the overnight session is likely to drift up. So if you're someone who is willing to hold in the overnight session, these are the conditions you would hold an overnight trade for, because it's likely to give you a little bit more, 10% or so of the move that you saw the prior day. And so this is what we got in the overnight session. We had continuation, pullback, or continued buying, pullback, and then a continuation move. The expectation is that it's likely to balance, create a flag, and then we're likely to see, the expectation is we are likely to see a higher high on yesterday's high of day in the RTH session, which puts us in this 4,100 area. So around 4,100 this morning, I'm keeping my hands off the mouse. This is going to be a major strike in a pretty noisy area, and it's likely to result in people taking profits off the table. So be careful trading into this 4,100 zone. We're currently trading at 40.97. Today is one of those days where the expectation is for continued flow to the long side, but we've gone a long way yesterday. This is a very big move, and it may just rest, and it may pull back a little bit all the way down to the 40.50. So I'm not drawing any lines this morning to tell you what I'm expecting in terms of scenarios. I'm remaining unbiased and neutral as possible, and I'm looking for short-term setups this morning. I'm going to emphasize buying pullbacks with the trend, but I'm also aware of the fact that we are opening just above the mid VWAP and the overnight point of control in a balanced profile, and I'm expecting it to be somewhat choppy. So I'm looking for two-way action in this morning's session. So let me see how many of you have actually, out of the 700 or so watching early, we only have about 85 or so votes. Please take a moment to vote. I'm going to put this up again, and we are going to put the position on as soon as the Trader Bite's done. Go to eclear.me/event-voting, or it's pinned to the top of your live chat on YouTube and on my Twitter feed if you're on Twitter media, Periscope. Please click on that and go vote for what you believe, how you believe today will settle versus yesterday. Here are some little twists that I changed the program starting in December. I removed Russell and 6E for the lack of popularity or the lack of votes there. And then we have ES, NQ, and CL. These are the three most popular products. Here's the thing. We want to put on 5 contracts in general. So I set up, instead of a yes-no vote, I set up a, let me show you this. I set up a high confidence yes, high confidence, no, and yes, no. So I'm adding conviction. And instead of putting on one event contract in each product, if the dominant vote is for a high confidence vote, we put two. So we can hold up to six contracts in this live charity account, um, in order to accelerate things a little bit. And I want to remind you, this is the form right here. This is where you should be going to vote. So you can select yes, no. So you could choose yes, which is a normal yes, a high confidence yes, a normal no, a high confidence no for ES, NQ, and CL. And then we'll get the results. And based on these results, we'll put the positions on. Okay, please participate. This is kind of a cool thing to see how things play out. And oh, 147. Wow, we just doubled the vote. I appreciate that. And what happens here is, by the way, uh, excellent opportunities, in my opinion, in the event contracts yesterday. You could have bought the 40/50 strike yesterday for like $2 for a $20 payout. You could have bought the 4,000 strike when it was at 39.56 for about $4 for a $20 payout. Remember, you're risking just the $4 in cash when you trade these products. You're risking cash. There's no leverage in these products. And this is why I'm trying to bring awareness to them. They are fantastic, in my opinion, for event type stuff where you believe that there's some big thing happening. You can trade them from 6 p.m. Eastern at the beginning of the session all the way to the settlement time, which is 3 p.m. for 4 p.m. for equities and 2:30 p.m. for crude. And if there's a big event that you anticipate, you can take a position, and you're risking cash. And you can trade as many of them as you want. Of course, I encourage you to trade them at EdgeClear. You can go to itrade.events to participate. The Rhythmic web app does a great job. And it's just a great way. If you sat on your hands or you're too scared to trade yesterday, the place to be was in these event contracts. These event contracts. Because you're buying a call or you're buying a put. You're buying a call or buying a put. Your risk is well defined, and then you can then participate in the upside without being stopped out or whatever. I mean, you're just risking the $2 or $4 or $10 to get 20. The maximum you can gain is 20, and there's no stopping out while it's jiggling or whatever, which is what most people are afraid of and most people suffer from. This is why I'm advocating for these products. And you can trade many different products, many different CME products across these, and you can define your risk really well, which is something that people need. Anyway, I'll stop talking about them. More details at itrade.events. Would love to see you trade these instead of the micros or the minis when there are events. There's some real advantages to doing so, in my opinion. Good luck, and I'll catch you tomorrow morning. Take care.
New high gold.